Hi, I'm creating a quick video here on how does a credit score affect your monthly payments. This is how having good or bad credit impacts your mortgage loan payments. So let's get started. So I'm Carl, the Money Nerd. I'm a realtor, mortgage broker, and a landlord. I can be reached at 720-732-4167 if you have any questions. This is not intended to be legal, financial, tax, insurance, and/or real estate advice. This is intended for educational purposes only. Please consult with your attorney, loan officer, CPA, insurance agent, financial planner, and/or realtor for such advice. My NMLS number is 1254488. So, do you need to have a credit score to purchase a home? No, but it sure is a lot easier if you do. A lot of financial experts out there are teaching that you don't need to have a credit score to purchase a home. The reality is, only a few lenders work with someone who doesn't have a credit score. They need to do what's called a manual underwrite, a lot more work. I don't necessarily know that those lenders have the best rates. You would want to check on that and see. But my experience is that if you don't have a credit score, you need to put at least 20% or more down. I did have a client that did purchase a home. He did not have a credit score. He had to put 20% down. We did find a local lender that would work with him, and he didn't have anybody to shop compare rates to. He just had to go to that one lender. So he had one lender here in the Denver area that was willing to do the loan. We might have been able to find others, but there was one that was willing and was able to do the loan. And he got the home. He's a happy guy. He owns the home. Now he has a credit score, by the way, because that loan is getting reported to his credit bureau. So if you have a low score, you may not qualify to purchase a home. So I bring that up because some people say, well, if I don't have a credit score, I can maybe buy a loan. Well, chances are, if you probably have a score, you may not know it. You may have purchased something in the past, may have opened a credit card, and you're like, well, I'm going to go against the system. Well, guess what? Those credit card companies, they're going to keep reporting for several years. It is possible that you could have a credit score, and then if you just basically stop using credit altogether, pay everything off, close all the accounts, at some point, you will no longer have a credit score. And more power to you if you don't have a credit score. That's a personal choice. I personally have a credit score. I've only met three people in my life that I can think of off the top of my head who didn't have a credit score. Two of them are my tenants. They are still my current tenants. They've been my tenants for several years. Excellent tenants, great tenants. I have no complaints. The other was that guy I was telling you about that purchased a home. He was a young guy in his early 20s, had been working for a few years, and like I said, we had limited options for who we were able to get a loan for the guy with. So you most likely have a score if you've opened some kind of credit in recent history. Recent history being, say, the last 5, 6, 7 years or something of that nature. So let's keep going. How does a good score help with your loan? So the higher your FICO score, the lower your interest rate is on the loan. If you need to get mortgage insurance, the higher the credit, the lower the cost of the mortgage insurance. So mortgage insurance is something you're going to need if you're putting less than 20% down in most cases. There's some loans out there that do not require you to have mortgage insurance. The VA loan, the FHA loan, the mortgage insurance is basically, it's the same no matter what your credit score is, but you're stuck with that mortgage insurance for the life of the loan. A higher credit score increases the amount of loans you have available to choose from. If I have a really low credit score, there's lenders that'll work with me, but if I have say an 800 credit score, guess what? Most lenders are excited to work with me. I've got tons of lenders want to work with me. If you have a 520 credit score, there's just a handful of lenders that will actually work with you. There's people that'll do it, but boy, the interest rate's going to be higher and everything so the higher the credit score gives you more purchasing power. And people are like, well, how is that? How do I get more purchasing power? Well, there's this thing called debt to income ratio. So basically, the lower the rate, the lower the monthly payment. The lower the payment, the lower the DTI, debt to income ratio. Buyers qualify for a maximum monthly payment based on income they earn. A lower rate means a lower monthly payment. So let's just take an example. Some people are like, well, I would never go up to the top of my, credit or whatever. Well, let's say we got a husband and a wife. They both make good income, but we can't use the husband's income because he's on commission, self-employed. Maybe he's a contract worker, hasn't been doing contract work for that long. The wife has a steady paycheck. We can only use, so they can afford more home, but we can only qualify based on, say, the wife's income, not the husband's income. So in this particular case, we maybe are going to push them to their max, the max that the wife can afford on her income. So in this case, we may find that, hey, that higher rate means that the monthly payment's going to be higher, but if the lower rate, the lower payment. So translation is, I can buy more house at a lower interest rate. So let's just say I qualify for a maximum payment of $4,000 per month, and so I could buy, say, $550,000, get a $550,000 mortgage or something like that. And the interest rate, if I get a lower interest rate, maybe I can get $570,000, maybe 30, 20, 30, 40,000 more dollars. So the important thing here is to consider is that lower rate potentially opens up more buying power. It not only potentially, it does. Whether you use it or not is a different story. What other things are impacted by the credit score? The cost of car insurance, access to car insurance. A lot of car insurance companies want to see you have a credit score. Credit card interest rates. If you're getting to get a credit card out there, a lot of credit cards have, hey, we'll charge somebody with really low credit, we're going to charge them a higher rate. If they have exceptionally good credit, we're going to charge them the lowest possible rate we've got. So the guy with a 600 credit score probably is getting the worst interest rate. They're probably a pretty ridiculous rate. They're probably like 29% or something crazy like that. Whereas the person who's got really good credit might be getting 12% or something like that. Not that neither of those are great rates, but you get the idea is that the lower the lower the rate, the higher score, lower the rate. Personal loan rate, same situation. Car loans, same thing. Cars, you can go to a bunch of different credit unions. You can see that they have different loan options. A lot of them will post their loan options for, a person with a certain credit score gets this rate. So ability to rent an apartment or a home. People are like, well, why does my credit score impact that? So the landlord could sit there and say, hey, I want to put a minimum requirement out there of a 700 plus credit score. Not an unreasonable thing for a landlord to do. A person with a 500 credit score has probably missed quite a few payments and probably maxed out on their cards and probably isn't necessarily in the best financial condition. Whereas a person with an 800 credit score, boy. So if you're sitting there, maybe you're competing to get an apartment. I mean, housing right now is kind of scarce, at least in the Denver metro area, and sure, maybe in other parts of the country, it's the same situation. And you're one of 7 applicants coming in there, and the person with an 800 credit score probably is going to get chosen over the person with a 600 credit score or 580 credit score. That landlord's objectively could say, hey, I've got 7 applicants here. I'm going to take the person with the highest credit score. They may also factor other things like income and things of that nature, but some jobs require employees to have good credit. Let's just say you're a bank and you're going to hire someone to lend people money, and or something like that, and you've got a guy with a 500 credit score trying to lend people money, or in handling people's money. You're like, yeah, do I really want someone with a 500 credit score advising people to get, and I'm not saying if people with 500 credit scores are bad people, but the bank, the employer might decide, hey, they want to hire somebody with a good credit score versus someone with a bad credit score. So these are things to consider. But let's get down to the part we've all been looking for, which is, what is this actually doing? So I put together a scenario here: the rate, the payment, and the MI by score. 5% down, 570K loan, 600K purchase price. So they're putting $30,000 down. At a 700 score, the rate's 7.289. And we can go next to 720, it goes to 6937, 740, 6851. You'll notice if we go all the way down to 800, the score stays the same. And you'll see the payment gets, goes from as high as 3903.49 down to 3735.38. Then we also have to consider the MI rate. So in this case, a 700 has a 0.45% MI rate. So they're paying $213.75 per month for mortgage insurance. And why that is the mortgage insurance is what protects the bank from the event that you default. They're going to cover a deficiency. So they're figuring a guy with a better credit score is less likely to default. The math and it's been proven that a person with good credit typically tends to keep good credit. A person with bad credit, unfortunately, doesn't typically do as well. They're more likely to default, make a mistake. And so it's kind of a proven history. Your credit report is basically demonstrating to the world that you are managing your money well. And, you know, person without a credit score, the bank doesn't have a lot to judge the person on. So there are people that will do those loans, but the bank would like to see the experience. Most banks do. There's some that don't require it, but once again, when I have more options, I probably can get a better rate and have better choices. When I have a low credit score or no credit score, I have less options. So you can see here that, you know, the payment goes all the way from 4117.24 payment with MI. So if you look right here, and then you go all the way down here to the 3825.61. So basically 700, 760. I did it in 20-point increments. You'll see that basically, if you're able to change your score by 60 points, you're going to have a tremendous improvement in what you're going to be spending per month. That comes out to, gosh, about $300 differential, roughly between the two. So I think you might want to try to improve that credit score. So one of the things I encourage people to do is to get together with their lender prior to getting a loan. You know, say your lease is going to end in about 6 months or something like that. Now is a great time to get together. Even if you just signed a 1-year lease or something, still any time getting together with a lender. Most lenders are willing to sit down with you and spend a little bit of time. I know I am. Sit down and say, hey, let's talk about how we can improve your credit. Let's talk about getting you set up for becoming a homeowner. And I've sat down with a number of people over the years and sat down and helped them get their credit together. And sometimes it takes some time. It's not going to happen overnight. It could take sometimes months, maybe even years, but usually, typically, if a person, you know, has some resources, maybe has a good income coming in, we can target how to, you know, improve certain things, or, you know, pay off this credit card, pay that credit card down, things like that. Maybe open some new credit lines, things of that nature, and we could try to get them on a journey to get a better credit score. I hope you found this video helpful. If you do, please like it. Please feel free to share it with friends and family. Please feel free to leave a comment. Also, feel free to reach out to me at the 720-732-4167 if you have any questions. I'm planning on putting some other videos together soon on ways to improve your credit, you know, more details, getting into the nuts and bolts of that. Also, more details about, you know, different strategies of setting up credit, building credit, improving existing credit. So thank you for watching and have a good night.